Hello and welcome everybody to today's webinar, the Practical AI in Payments session, moving beyond buzzwords to bottom line impact, and I'll cover that in more detail in a moment. My name is Gary Wright. This session is sponsored by CGI, and I'm the head of research at Finextra, and I'm moderating the session with the panel who I'll introduce to you formally in a moment or two, but Ainsley, Sophia, and Craig will help us to talk through this topic. And what are some of the things we're going to cover? Well, I'll mention those in a moment, but the most important contribution is that you can give us. Through the time you're on the call today, please, through the link provided, ask any questions, share any comments, give us any remarks. And as the session goes through, we'll pick up on those and make sure we try and include them into our discussion, which takes many forms. But there are also 4 assets that are available for you to look at and download, and I'd encourage you to do so. Again, through the link provided, you can see 4 assets that talk about AI in our payments and treasury world. There's AI and the use of it in predictive payments. There's AI in the use of the life cycle of a transaction, particularly around intelligent routing. There's a short slideshow on AI without fear or favor. It's looking at the advancement of the technology of AI in our business. And there's also an interesting asset on must-haves in applying Gen AI, which is a hot topic for us today. So, practical AI in payments, moving beyond buzzwords to bottom line impact. And what does that actually mean? Well, we're going to be looking at the use of AI, which is often talked about and clearly is a hot topic in today's environment. But more importantly, what does it look like if we apply it in tomorrow's environment? And I don't mean in years to come, but in months to come. The fact is we're at an early stage in many people's understanding and development and use of AI in today's business, but there are other developments that are happening around primarily the application of Gen AI, and what does that mean for us? How does that change what we can do with the use of AI, and what impact will it have in what business areas? What new forms of AI help us to look again at how we do things? And we'll talk about some of the practical opportunities to do that, some of the use cases, from improving maybe STP rates and looking at things operationally, to looking at things where they have more of a customer impact around the management of payments, perhaps even the management of liquidity and the flow of cash that people have to be responsible for and look at. And we'll also touch on why this is a good time to tackle it. What things are coming together to prompt this review, this fresh look at how we use AI practically in the world of payments? Is it, for example, the development and adoption of ISO 20022, where there's a greater focus on now data sets, and how do we cleanse the data, use the data, and deploy it against the background of Gen AI? So some real practical applications for the business that we're in around payments and treasury and cash flow and liquidity. So with that in mind, let me welcome and introduce our panel today. Firstly, we have Ainsley Ward, who is the Vice President for Payment Solutions at CGI. We have Sophia Bantanidis, who is the Future Finance Analyst at Citi Global Insights. And we have Craig Borevich, who is the Head Partner, International Money Edge Consulting Group. And thank you, all 3 of us, for joining us. Format is quite straightforward. I'll ask each of our speakers in turn to give us a couple of minutes of contextual background, set the scene for a wider debate that we'll have later on that I hope you'll contribute to, as I say. So let's start off, and let me turn to you, Ainsley, with some opening remarks, please. Ainsley.
Thanks, Gary. So thanks everybody for joining this session today. Really excited to the conversation that's coming with the great colleagues out here along with me. I think from my perspective and that of CGI, we're going to be very much looking at the very practical applications of the different AI tooling that's available, as well as what the different AI tooling that's available is. If you look back a few years ago, having been in the payments business for a long time, there's lots of waves of technology that come along. Our last great big breakthrough was crypto and blockchain. And of course, that spawned many projects and many dollars were spent. we didn't necessarily reach the outcomes that we were looking for. I think given today's financial environment, we're probably looking at applying the technologies that have appeared in the last 12 to 18 months with generative AI and the AI tooling before that, that things will have to be a whole lot more practical. We're definitely going to have to be a lot more responsive in the way that we deliver applications of this kind of tooling. Further, because of its potential, we have to make sure that we do so in a responsible manner. CGI as an organization has signed up to Canada's voluntary code of conduct for artificial intelligence, has also signed up to the EU's AI Pact, which means we're looking very, very closely at these things, making sure that we're very respectful of the data privacy regulations and data privacy in general. Of course, that's top of mind for the vast majority of organizations in this space. And we definitely have to be mindful of the fact that although some of the past AI tools have very much been aligned to doing things in real time, generative AI is not quite into that space yet. So it's an interesting time. How do we use these really very, very powerful tools, apply them to a payments market that is going real time and moving fastly in that direction with larger volumes of data and get benefits out of them? So I think it's going to be an interesting conversation today.
Ainsley, thanks for that. And that last point is quite interesting because there is more power in the use of AI. And of course, customer expectation is that they do things instantly and fast and in a seamless fashion. But of course, the complexities of managing all that goes on behind the scenes when it comes to managing payments and fulfilling your obligations in terms of KYC compliance and adherence is a challenge. So how do we put the two together? So thank you for that, Ainsley, and we'll pick up on some of those points as we get into the conversation. So Craig, a view from you, please.
Yeah, absolutely. I think we're certainly seeing a drive, as we're building real-time payments systems around the world, and with ISO 20022 on the horizon, it's driving a lot of payments modernization activity across banks around the world, and that is where a lot of the opportunities for the implementation of AI to basically create more modern, faster processing systems and develop these platforms further.
So again, an interesting point, as I touched on when I opened up the session, is there an alignment of different things coming together aside from the development of Gen AI that helps us push on with this enhancement or modernization of the system? And of course, if we think back, companies have spent many an investment dollar on ISO 20022, and are we at the peak where maybe we need to think about the commercialization or how it actually has an impact on value and service and revenue? So again, Craig, we'll pick up on that one. So thank you for those comments. And Sophia, your thoughts, please.
Yeah, thanks for that, Gary. So I work in a part of Citibank called CGI, just to be confusing, a different part of CGI, not the same one as Ainsley. That stands for Citi Global Insights, and I represent Citi's Thought Leadership Division, where I work as a thematic research analyst. So as a research analyst, what we do is we produce thought leadership reports. The theme that I follow is the future of financial services, which is pretty broad. It just means any technology, market development, and even regulatory development that is going to impact the future of the industry that I work in. Not necessarily in the short term, we take more of a sort of midterm and long-term view. So obviously, of course, AI is one of the technologies that we write about quite a lot. We have published two reports, two deep dives in AI. These are publicly available papers where people can reach out to me if they would like a copy. One report, which we released in January, is all about agentic AI, which is really the buzzword for 2025. It's called Agentic AI, Finance and the Do It For Me Economy. And the other report that we published is called AI in Finance, Bot, Bank, and Beyond. Of course, we have also published multiple reports on payments and the future of cross-border payments. Now, what's really cool about our papers is we bring in external experts for their views, but we also interview our clients, and we include these proprietary survey results in the reports. And funnily enough, when we asked our clients about payments and the future of payments, and we asked them, well, what are you focused on between now and the next 5 years? What's going to have a really big impact? Surprisingly, it wasn't AI. So for that medium term, what our clients are really focused on delivering is the move to 24/7. When we ask them what will be more impactful after 5 years, the results are AI followed by DLT. So I just thought I would throw that out there. Looking forward to our webinar and our discussion. Thank you, Gary.
Thanks, Sophia. That's an interesting view. But maybe the 24/7 and AI has to actually go together. But maybe there's a stronger connection between those things, and that sometimes comes out in survey results, because to fulfill your obligation to move transactions in an instant way, then all the obligations you have to undertake, which I just mentioned, do require very, very careful management of data and overview of transactional detail. But thank you for those opening remarks. And I hope that set the scene for everybody. If you do have any questions or remarks, please do share them with me. And as I say, there are some assets for you to download as well. So let's move back into a deeper conversation, Ainsley, and let's just check and balance where we are today, because as you say, the technology has been around for a while. We've had poor experience with heavy investment in blockchain, Web 3.0, other things have all come and gone. So I suppose, why is now such a good time for looking again at the use of AI in practical terms? So maybe you could share a few thoughts as to where it's being used today, and some initial comments on why now is the time to push on with the use of Gen AI particularly. Ainsley.
Yeah, absolutely. So, I mean, in the payments industry, I've been around for just over a quarter of a century. In early 2000s, when I was working at MasterCard, they were already using neural nets for large-scale fraud and analytics stuff run through the network. So those are sort of basics of the introduction of AI have been in for more years than I've been in the industry, which is, a fair old time. Look at the grey in my beard. And the sort of reality is that as we've gone through these things, we've seen an evolution of the tooling, but we've also seen an evolution in the thought around what we can do with that and what we can achieve. And really, there are some really interesting themes. The first theme is generally fraud. How do we drive fraud out of the system? And obviously, the speed at which fraud moves aligns to the speed at which payments move. So as we move to real time, the fraud moves into real time. So again, these are things we need to keep an eye on. We've always had dirty data issues across the payment industry. ISO 20022 has been a big movement in that space. But also, the more data you put into a transaction, the more likelihood there is of foul data messing up those transactions. So we're sort of at a point where the tooling is catching up with the needs that we have to get out of it. 2018, 2019, I did some work with Payments Canada around how we can apply AI tools in central market infrastructure. So looking at variable rate netting aligned with the transaction flows as that moved to 24/7, and a few other sort of pieces. But now we're starting to hit the real practical use cases. What are the things that can impact the cost of payments going through the system? One of our major cost drivers in payments is the inability to process transactions in a straight-through manner. Some of that comes from data issues, some of that comes from transactional issues, thoughts around how we manage our payments volumes and values, and some of that comes through the fact that you actually need to stop some payments to make decisions on them to see if they should go through the system or not. And these are all places where the hope is that Gen AI can start to make a difference by augmenting the operational abilities of organizations. So definitely we've sort of moved from capturing the really nasty bits and pieces in payments to how can we start to augment our business and make it significantly more efficient. And I think that's where AI is going to have the biggest impact.
So just on that point, Ainsley, because everybody has a fairly maybe a dated view of straight-through processing as an internal operational efficiency, we're now talking about straight-through because it has to go from one party to another party, cross-border, cross-clearing settlement systems, and so on. So it's really that overarching, holistic view that increasingly institutions need to have a view on. Is that fair, Ainsley?
Yeah, absolutely. I mean, obviously, the beauty of real-time payments, they either go or they don't. They're a yes or a no. They're very, very binary in the way they transit through. But the vast majority of payments today are still not into that space. They're still not running real-time with very, very pure data. So we're still getting those, particularly the large value transactions, the transactions that are going to places that are outside of your own borders, so places where you have less control. And therefore, banks are naturally very cautious about those transactions, trying to not fall foul of anti-money laundering legislation, trying to avoid funding terrorists if they can, and trying to avoid sending things to places where they're not allowed to because of their own government restrictions. So all of these things have to get stopped and checked. And of course, there's always somebody that wants to push those payments through the system, regardless of whether they're allowed to or not. So again, it's not necessarily fraud, but it is sending things to places where they shouldn't be. And we have barriers in place to make sure that those things don't happen. But the downside of those barriers is that it creates friction in the payment system. And of course, if we can apply tooling to still have those checks and balances, but to reduce the friction, becomes a lot more efficient as a process.
And just finally, before I bring in Sophia and Craig, where would you say, just as a benchmark, people are now in terms of understanding the deployment of the practical use of AI tools in what they're dealing with now?
Well, I think we've had sort of Gen AI in the wild for at least the last year or so, and I'm guaranteeing that the vast majority of people have been on Bing and typed questions into Copilot and seen how great or poor the answers are. So the democratization of these technologies has meant people have been able to get a lot more familiar with them than they perhaps were with previous technological iterations, movements into the market of things such as blockchain, which were very, very intangible. So Gen AI has made AI very, very tangible, and therefore I think the base level understanding is much higher than it has been with previous technology introductions. However, the depth of understanding and what you can actually do with these things on a practical basis is still quite theoretical, and we're trying to sort of see if we can make that a lot more easy to understand and a lot more practical and tangible.
I'll come back to that last point later on, because there's almost too great a list of opportunities. So where do we start to prioritize it, and where do we assess is the best value? But Sophia, from your point of view, I mean, clearly, as you said, it's a 24/7 world. Even if cross-border, it doesn't work quite so well. People are working on that. But where do you see the growing use of Gen AI, and how measurable and tangible a benefit do you think it will be? Is it a game changer?
Yeah, of course, Gen AI is a game changer. I mean, we even say in our report it is the general purpose technology of the 2020s and the 2030s. And well, general purpose technologies come with huge opportunities for growth, huge opportunities for innovation, but they also destroy existing ways of doing things, particularly in the short term. So they do create, and they will create, winners and losers and fast followers. And we analyze who could be in these winners, losers, fast followers buckets in our report. But if I may also pick up on some of the points that Ainsley made, in terms of where we are with Gen AI, we try to do this temperature check as well when we do our research and our analysis. We are at the very early stages of commercialization within institutions of Gen AI. Now, of course, a lot of people have used it as a consumer. They've used it on their phone, just like Ainsley said. And of course, it is also a very different technology to other technologies like blockchain and DLT, which are back-end infrastructure technologies. Gen AI has brought UI to AI, right? Very different. What we're seeing, Gary, is that despite the multiple opportunities in Gen AI, all across a bank or an institution, be that payments, be that in treasury, be that in HR, in legal, in risk and compliance, in research, in portfolio management, or in coding, we're seeing that banks, in comparison to other institutions, are actually playing catch up in the Gen AI race. And this was sort of echoed in a survey that Citibank did, that we did with our clients. We asked our clients, well, where are you in Gen AI adoption? Have you started? Are you at the beginning? Is it mature? Where are you at? And the results are quite striking, particularly when we compare them across sort of our different client segments. So when we look at banks, most banks about a quarter of banks, 21% told us they haven't even started doing anything on Gen AI. Now, that number is very different when we asked our clients that are fintechs, where are you at? Have you started? 4% said they haven't started versus 6% for insurance firms. Across the board, for these three client segments, most are at the beginning. 68% of banks are at the beginning versus 83% of fintechs versus 88% of insurance firms. So quite a difference depending on the profile of the company, depending on the profile of the firm. The more highly regulated one is, the more business lines you have, the more global you are, it is likely that you will move at a slower pace. Now, we think over the sort of medium term,
Sophia,
taking that 3 to 5 year view.
Sophia, can I just interrupt you there? Because I want to pick up on those points about that usage, and maybe come to you, Craig, on that point, because there's a bit of me that says I'm not surprised by those numbers, which is interesting. But firstly, your comment on that, and also just to close out this early session on the development of AI, to pick up on Sophia's point. Also, I'm very keen to pick up on the point that Ainsley made about its use in central market infrastructure, because I think that's another point. There is a sort of division that says we can use this within the realms of sending money, making transactions, and we can use this in the world of actually how we improve services to customers. And I think we should pick the two out. So, Craig, your view on the points I've just raised there.
Yeah, and like we've been covering, I think a lot of the drivers are sort of a combination of that 24/7 and real-time payments aspects of the industry. So, on the front side, I think customers are probably most familiar with using AI as chatbots, which are integrated into a lot of banking platforms these days that help you with sort of day-to-day banking, helping you with payment processing, money movement internationally. Chatbots can basically help customers directly with some of those functions, and that gives you that 24/7 kind of customer interface. And then as you sort of move behind the scenes, in the payment space, obviously AI has been in the fraud AML realm for quite some time, but obviously we're seeing more training of AI on payment processing. So when it comes to those high value payments and getting to straight through processing, training the AI on all of the exceptions and investigations activities on payments that can't go through straight through processing. AI can basically help with doing things like corrections, matching payments beneficiaries to customer records in the bank, and get to a near straight through processing by having AI assist in some of the exceptions and investigations that go on payments that are stopped within the bank. And then as you move backwards into the liquidity side, as we build more payment rails, the liquidity management and settlement optimization that banks need to do from a cash management perspective is getting a lot more complicated. So as you have sort of multiple wire rails between chips and FedWire, multiple real-time payments rails between FedNow and RTP, and other sort of liquidity-backed solutions for banks that operate internationally with CLS and CHAPS and everything else. Moving money around the world, managing nostro vostro account balances, and optimizing your overall liquidity globally is becoming much more challenging. And that's definitely an area where AI is going to be a big help in cash management to basically manage liquidity and cash flows globally.
Thanks, Craig. And I suppose if I go back to you, Ainsley, and I'm still focusing on this sort of the internal, if I call it that, process of initiating transactions and managing them, particularly on an end-to-end basis. And then obviously we go back to operational improvements that have an impact on the customers. Firstly, you may have a comment on what Craig mentioned there, but let's talk about a little bit about the cleansing of data. And I'd like to draw out what the impact of ISO 20022 is here in order to help facilitate what we're trying to do around the practical use of AI. Ainsley.
Yeah, absolutely. And liquidity is something I'd love to go back to later, because I think it's one of the big places where AI is really going to help organizations to manage those pieces as systems become more collateralized. So collateralization is one of the big trends that's happened in payment markets. And the other, of course, is the adoption of ISO 20022, as we mentioned earlier on, which has given us a sort of almost a common language across payments around the world. So we're starting to see some standardization, and I've been deliberately grey with some of those pieces because, of course, there's nothing more unstandard than a standard. So the way that it's adopted in many different countries can be very different. In Europe, under SEPA, we've seen the adoption of structured addresses within ISO 20022, which again, as a very small detail, is going to have a big impact on the way things are held within those messaging. Now, as an international organization, if you are a bank getting payments from all around the world, one of the really important things is that in different countries, addresses tend to be structured differently. So when I lived in Belgium, it was the street name first, followed by the house number, and the postcode always started with the letter B. When I lived in Canada, again, the postcode structure was very similar to the UK, but slightly different because it's got a letter in the middle of the third component. And they tend to organize the things by province. In the UK, it's a bit of a free-for-all. As long as the postman delivers it, nobody really cares. Now, if you're juggling all of those things and trying to get them to work in a database, you should be looking to receive addresses for your customers that may look like the structure of Belgium, but with a UK address, or look like the structure of Canada, but with a UK address. And if you then apply that to your database, of course, you're then polluting the data that's held within your payments database, because it may not look the same as the address structure in the payments that are going out. An address is a really good place to start, because it's a really obvious one that we all tend to use. But there are lots of fields throughout the ISO data that are really, really difficult to manage sort of standardization onto. And one of the sort of practical applications we're looking at for AI tooling is on inbound and outbound payments. Can we make sure that the customer record held within the bank becomes the standard against which all data is stored? So can we start to do some forms of data cleansing around that to make sure that the data throughout your database is always formed in the same manner? And one of the places where that becomes really, really important is when you're looking at legislation such as GDPR, which of course has the right to be forgotten included into it, which means that if you cannot find a person's records because they've got lots of different ways of being addressed, of being named, and certainly Borisovic and Benitez and Ainsley are very difficult things to spell for many people. So we actually have a really good selection of names on this one, which give good examples of how names can be juggled apart as they go into these databases. And again, this sort of matching of names and standardization are the things that drive these exceptions we were talking about, the stupid exceptions you get out of your system when you don't have clean data, which reduce payment efficiency, which reduce the ability to move towards 24/7, reduce the ability to get best cost out of your payment systems. So there's a pile of things that sort of really drive us away. And data cleanliness is one of the holy grails that banks have been searching for decades. And now perhaps we have the tools to start to drive towards that.
I think that's a key point. Also, knowing the data you actually want to gain access to, and the reasons why maybe ISO 20022 is a driver for that, because clearly you can start to look at the construct of wider data sets within the format of the Swift message, and then what do you do with that? And I'll come back to that point. Sophia, any thoughts on what Ainsley raised there? And how do you see those customers of yours that you've been talking to picking up on the use of AI? Because clearly they're not necessarily at an advanced stage, but are you aware that they're thinking about what they need to do and how they might address it, Sophia?
Yes, I mean, of course they are. Everybody is thinking about what to do with it, how to commercialize it, how to monetize it, what their use cases are, what their strategy should be within their own organization. What I was saying earlier is that it is not in full-blown production yet.
Right.
They are still at early stages. It's not that they're not thinking about it. I think every firm has some kind of view on it, even if their view is, you know what, we're going to park it and not do anything. But the interesting thing is when you look at use cases, and there are many use cases, certainly beyond payments as well, not just payments, but use cases have different times to market. Depending on the complexity of the use case, depending on the adverse impact it can have on your financials if you get it wrong, and depending on the regulatory scrutiny that it attaches. And we analyze this in our report, AI in Finance, Bot Bank, and Beyond. So if you think about firms, the use case with the shortest time to market, and if I look at Citibank as well, the use case that we've rolled out, it's to do with IT, it's to do with coding and putting many developers on, for example, the GitHub Copilot, so that they can code faster and more efficiently. And by that, an extension of that is that eventually products will be able to be rolled out more quicker. I think for the short term, with respect to generative AI, most of the impact will be felt on internally facing tasks to help make firms more productive and efficient, as opposed to using the technology to all of a sudden roll out new products. That will come a little bit later on.
And to complete that, what are some of those internal tasks that you're referring to, Sophia?
So I already mentioned one, which is the killer use case, and that is to do with coding and putting developers on what have you not, the GitHub Copilot. That's number one. Another internal use case can be automating how you write your emails. Another internal use case is streamlining your HR function or your policies and procedures so that, I don't know, say a member of staff that's working at a regulated institution can very quickly find the correct policy and procedure that the employee has to adhere to. Another internal task is trying to find the right answer to the correct due diligence question that you have to do for your client.
Yeah.
Those types of things.
No, thank you. And Craig, to pick up on AI, I still want and some of the issues we've discussed there. I'd like to go back to the intelligence it can bring in the selection of the best platform for which you send a payment. I mean, traditionally, and Ainsley will nod to this, you've had this high value, low value world of making payments, fast or slow, liquidity cost X or Y, fees A or B. So that's always been a challenge. And as I said, there's not less clearing and settlement platforms, there's more now. Yep. Greedily, the US have two same-day platforms. So how do you think it's applying it when you're looking at sending your money cross-border through these clearing and settlement platforms, Craig?
Yeah, and again, I think it's where AI is going to play a bigger role in assessing what is the best way to process a payment, based on the value, based on the time. And even within the bank would need to assess, like if you can get to the same bank through both real-time rails and deliver the funds to a beneficiary's account, which rail is the best option from a cost perspective, and that may relate to the volume of transactions that the bank is doing over that rail. It may be the cost, it may be the time. There's various different aspects of moving that money across the various different rail options, especially for the U.S. market, where AI will help optimize for the bank which is the best way to route that payment on the backside.
And Ainsley, a comment on that?
Yeah, absolutely. And piling on to Craig's conversation about the different rails in the US. I've just finished working on the solution design for BIS Nexus. Nexus is a project to link together all of those different rails to allow cross-border real-time. And it's not alone. There is actually a couple of other initiatives going on that are all trying to do the same thing. So you may end up with 2 domestic rails, which each connects to 3 or 4 different cross-border rails. So you may have 6 or 7 different choices as to how you send the payment in real time from the US to Singapore. So these are things that are really going to be interesting choices going forwards. But certainly within a bank, there is always going to be the question of what's the best way to send the payment. And that's where ISO 222 has been a great enabler, because we can now technically move payments between rails without asking the client for more detail. But of course, that has potential cost and speed implications. And so I can expect us to see regulations on the front end saying this is how we need to help the customer to decide to do that, and you stick to the customer's decision. So it's one of those pieces where we can certainly do lots of stuff at the moment. We've got to be sort of cognizant of what's going to happen in the regulatory space.
And just to pick up on your point, you wanted to mention liquidity. So let's talk about that, because it crops up in both market infrastructures and the world of treasury and banks.
Yeah, absolutely. We're in a space now where, again, this sort of proliferation of payment systems, the vast majority now of which are at least pre-funded or often more than that collateralized through central bank money or lodging of assets, as we used to see in the high-value payment systems, are other real-time ones. Because they want to allow more people to access the payment system, you have to pay up front and have money in place. Now, the last thing any participant wants to do is run out of funds on that system over a long weekend to actually be able to send payments, because otherwise they find themselves not being able to move money in the way that their clients are expecting in a 24/7 world. Not so important when it's $20 to move to your nephew for their birthday, but when you're in the realms of where TCH-RTP is now, which has sort of upped its limits. I think it's about 10 million now. Craig, feel free to correct me if I'm wrong, but if you're shifting those kind of sums and you've said you want it there now, it generally needs to be there now. And so therefore the last thing you want is for your bank to run out of liquidity. So if you've got a treasurer at a corporate level who is balancing all of these different payment systems, if you have an AI that's been looking at the transactions that flow through and therefore can sort of stochastically look at what's likely to happen and forecast where the liquidity is going to be needed and make advice about how to move your liquidity around and collateralize pieces, then we're in a much healthier situation that banks can take advantage of the different payment systems that are now in place and therefore can shift volumes. And likewise, those sort of intelligent routing complexes may take into consideration where the collateral is and how they can move money. And instead of sending it through one system because I've got very little collateral in there, it might start to route volumes through to collateralized systems where I've got plenty of liquidity and I want to make sure I push my transactions and use that liquidity effectively. So again, there's sort of some different dimensions to it.
Yeah. And were you saying there this could be a choice for the bank and a choice for the corporate?
I think we're going to see choices. I think the regulation will decide where those choices sit. At the moment, as Craig mentioned earlier on, the likelihood is that will be with the banks because they'll be doing it for efficiency and cost purposes. Perhaps we may see that shifting to the other side, that a corporate may get the choice of over which correspondent route payments take through a system because they don't want it to go to certain banks or they've got agreements with banks. If you look at the major globals, they may say, I don't want that routed through this bank because they're not my friend, but this bank is a friend of my bank and therefore we can start to move things in the right direction. So giving them the choice may be possible. But all of the things that Gen AI brings is augmentation of the decision-making process. So it gives us the information we need based on a pile of facts that help us to make better decisions. And I think that's the really exciting bit about it.
And Sophia, I don't know if your conversations with your clients raise this point of the choices that they wish to make or the decisions that the bank make on their behalf, because it's the most efficient way of providing a service. But choices seem to be very important for customers nowadays, particularly as they pick and choose their payments provider. Sophia.
No, we haven't asked our clients as part of the survey what choices they are making on banks, providers, and product. That was out of scope.
Okay. But it'll be an interesting one to see how it does develop when the obvious opportunity comes with them to initiate the way that certain things are actioned. That sort of point there that you raise and previous conversations has been talking a lot about the way that money moves across its infrastructures. Let's go back into some of those points that each of you have touched on about the real value that it can bring in a frontline situation, which does include some operational improvements that the customer gets the benefit of, but equally certain things that might be directly beneficial to customers as a new product or service. I suppose the first one, Craig, is actually with all the additional data that banks are now carrying across infrastructures, then that becomes an asset. And I suppose one of the questions is, how do you use the fact that you've all invested heavily your dollars into ISO 20022, and what commercialization opportunity do you get from that is one area of perhaps discussion around looking at benefits to customers. Craig.
Yeah, obviously there's a much richer data set that's moving around with payments in the ISO 20022 model, being able to process all of that. And I think, to Ainsley's point, there's all these different things going from structured to unstructured and back again in massaging data in and out of these formats. And obviously a lot of legacy systems continue to persist with unstructured type data models, and AI is going to make a big difference in being able to sort of massage data back and forth between structured and unstructured, from messages to sort of legacy data systems. And that's probably the biggest point for banks. I think on the consumer side, AI is going to improve the ability to fill and complete data and forms and content for corporates, and in developing templates for wires and real-time payments going forward. And that's probably one of the bigger areas that consumers are probably going to see an impact for that.
And perhaps the other question is, what do consumers need to know about what this can do for them? How do we impart that knowledge, which clearly is going to be beneficial and may require, in the case of some corporates, some changes within their technology stack?
Yeah, and I think it's going to drive the implementation of AI in ERP, accounting, HR systems that sort of feed into payments and all of these sorts of systems that are connected to the banks that drive those payments going out. Yeah, like it's the productization of AI, right? So I think for a lot of the use cases that we're talking through, you're not going to go out and buy an AI to do payments optimization necessarily. It's AI and how it's integrated into the tools and platforms and products that banks and corporates are building and implementing. And so that's where how companies like CGI integrate AI into their products and platforms to deliver on these optimizations. And it's really going to be how do we determine, one vendor's product with AI to do this payments optimization versus another product's implementation of AI to do their optimization of payments, and how do you kind of evaluate the inclusion and operation of that AI and its benefits to the organization.
And Ainsley, what about customer behavior? Because clearly you've got the ability to understand much more about an individual client or a customer segment, and surely that use of AI, smart AI, where you can analyze and translate, classify data and deploy it in a faster fashion, there must be endless opportunities there. And maybe, Sophia, that's a point that some of your customers might be considering. But Ainsley, your thoughts?
Yeah, absolutely. A few years ago, I worked with a bank in Canada about introducing inline trade finance for major corporate transactions. So as a transaction was going through, if the liquidity that corporate had at the time was not quite optimal, it would stop the transaction. It would make them an offer to sort of say, we can help you to restructure this payment and finance it, which was really interesting. But it was done and became a little bit of a point of friction as that transaction was passing through. So now if you start to use these Gen AI tools and look at the analytics and the movement of money that corporate is actually starting to generate, you can make the predictive points at the sort of places where they would be interested in knowing and understanding when payments are going to come through. So again, helping the corporate treasurer to understand the sort of position around their own liquidity, but also making suggestive, preemptive offers of how we can help them to smooth out those rough patches and make their cash flow work better. Again, I'm addressing that as the larger corporate, but if you start to move into small business, where definitely cash flow is the most important challenge that they face, anything you can start to do to smooth those pieces out without them having a permanent line of credit. So without them having to pay for sort of funding when they don't need it, and just switch that on for the period at which they might become more useful. Again, these things become very, very interesting as corporate and business tools. So certainly analytics around transactions, looking at where money needs to be and when it needs to be there, and making sure that there's plenty of availability of funding and financing bridges to make that happen, can be a really interesting play in this space. But that needs to come from good, clean data and tools that are able to analyze the data and work out when things are going to happen. Again, augmenting the decisioning process of people so they can make better decisions with good understanding of the data.
And Sophia, when we spoke before, we talked about some of the intuitive ways in which you can gain insights beyond what you have today. And any thoughts on that? We also talked about some of the applications around workflow management or fraud detection or claims and investigations. So any thoughts on those areas of opportunity for the use of smart AI?
I mean, we could spend like an hour on this, but I'll just in the interest of time, I'll be brief and perhaps throw out some new thoughts. So like I mentioned already, most of the impact in the medium or short term that we're seeing is going to be on internally facing tasks to help make us and to help make our clients more productive. And there are many internally facing tasks, and I would actually classify fraud in that bucket as well, spotting fraud. And we as a bank, Citi as a bank, we have been using AI for years for payment outlier detection, to stop fraud in real time or before it happens in multiple countries. I think we rolled it out in 90 countries or something like that. But I think the really interesting point, and we are kind of at this paradigm shift, is going to be when our clients or consumers, when they start using AI on us. Because up until now, what we've been discussing, I suppose, is firms using AI on their clients, but it's also going to work the other way around, right? If you think about it, all your stakeholders are going to be AI enabled, be that your clients, be that your regulators, and be that your central banks. So we are anticipating a surge of activity and request as a result of everybody, all our stakeholders becoming AI powered. So if we don't adopt it, if we don't do anything, we simply won't be able to keep up. Now, the interesting thing is when consumers start using AI on us through agentic AI, through bots, if you like, to execute financial transactions. And when you will have bots representing the consumer or the client interacting with the bank's own bot. And that is how finance is going to work in the future. And that is going to be extremely disruptive. When you think about how banks market their services, traditional marketing techniques won't work. Or when you think about how banks design products now, that's not necessarily going to work that well when you're facing off against a bot, right? And think about your own profitability and your funding as a bank. If you have a bot that's instantly looking out for the best deposit savings account and switching those positions very, very fast, could potentially be quite disruptive for a bank's profit. So yeah, interesting times.
That's a very interesting angle that perhaps I hadn't fully appreciated, particularly in a world of open banking where you do
Absolutely.
Yeah. And
exactly
so
that.
Yeah. So the deployment of the application of Gen AI with consumer choice, because as Ainsley said,
Yes.
it's all about choices. And the AI on us concept could make for some very interesting challenges the other way around, where the customers are assessing the effectiveness or the service of the providers that they're working with or wish to move away from. Very interesting.
Yes,
Any
I love
thoughts on
that. AI on us. AI on us. I love that.
Yeah, very good. Ainsley, your thoughts on that? Are you seeing that? Do you think that's
Yeah, I mean, certainly
likely?
a few years ago, there was this sort of famous realization that I believe it was Santander, that the way that international remittances were working was changing. When you had the incoming businesses like TransferWise, who were basically kicking the bottom out of their market that had been very, very profitable for banks for many years. And they made a decision as an organization, what were they going to do? They were going to move their efficiency internally to the point where they can compete with those incoming suppliers, so they can be best from an efficiency perspective, whilst maintaining the value, the rates they were charging their clients for the longest possible time, until such point as became unsustainable, so started to hit their volumes. So that was kind of a rational decision. I think we're at the point now, as Sophia just mentioned, where if people have access to these AI tools and they're analyzing the market to find the best deal, either for their payment or for their savings or for their international transaction, that banks need to be making the sort of moves now, so that when that bottom drops out and the price point shifts in the market, which inevitably will in a very few years' time, that they're ready to do that. So it's really sort of discouraging that Sophia also mentioned that there's so few banks already on that journey, or at the very, very start of that journey, when perhaps these things needed to have been sort of introduced a few years back. But certainly the good news is that the tooling is now available. We've invested over $1 billion in building our own platforms and services in-house, as have many other organizations. So there's a lot of industry and vendors that are ready to support these moves forwards. But it does all have to be done in a very responsible manner. I think that's an important part. We can't just let these things go wild. We need to be responsible about the way we use the tool.
We can perhaps end on that, but what I'd like to go back to, because I said at the beginning, this has a practical application in the near term. We shouldn't leave people thinking that actually there's another wave of technology development that's going to take 18 months to do. If the tech is there, what do you think, in summary, as we come to the end of the session, is the mindset shift that needs to happen, where people are recognizing that beyond what is happening today, there is a fundamental change. As Sophia said, it is a game changer. How do they lock into that, understand its benefits? Because it does tend to get spread out across the banking in silos, looking at their view of AI. Ainsley.
Yes, I think Sophia probably hit the nail on the head. You've got to look at the internal measures today, because they're the ones that you can do today. Using sort of co-pilot development tools to speed up time to market for products, we're seeing sort of 30% decrease in the cost of creating code for our own products, and I'm sure that will accelerate over coming years. We're able to sort of shift our sprint cycle, get more done in each of the sprints, so therefore more can happen in that production paces. Looking at moving towards synthesis of data for testing systems, so that systems are more robust, and can we sort of move away from the horror that was trying to use production data in test, which thankfully is sort of ironed out of industry. But the creation of synthetic data means you can have large pools of payments test data, which you can then push through your systems, test all of the edge cases, sort out what happens when you have bad addresses, bad names, and solve a lot of those exceptions problems before they become ingrained into your system. So therefore engineering in a lot more efficiency we're able to do in the past.
Yeah.
So I think those pieces, it's the preparation for the next wave that will come, which will be the expecting the prices to drop in line with the efficiency. So I think that's the pieces we need to do today, and those things in general are becoming available.
And Craig, given that you work with a number of central bodies and others around this, are you seeing that as they shift towards, to quote you, the modernization of their payments, they're understanding fully the impact of the next iteration of AI that we've been discussing over the session? Craig.
Yeah, I don't know that they necessarily fully grasp the impacts, but I mean, they certainly realize, what some of the benefits and potential is for a lot of these mechanisms. And again, from the central side, implementing AI for things like fraud AML, which tends to happen more at the central network side of things. I think the biggest impact is really how the banks are going to implement AI to better optimize what they're doing with central banks, more than anything, whether it's liquidity optimization, payment rail selection, those types of things are really going to be on the bank side as opposed to in the center.
Yeah. And look, we are coming to the end of this session. We've tried to cover a lot of the ground about practically where are we today with AI and where can we be tomorrow, and what are some of the steps between the two, both from an internal operational aspect, a cross-border aspect of settlement and clearing, and obviously where we go next in the future. And I do like the AI on us, Sophia. I think that's almost another discussion that we should be having when that choice comes to pass with our clients and banks. So thank you everybody for joining. I hope you've enjoyed the debate. I hope you've taken some good stuff away from it. I hope you had the opportunity to look at the assets. And so Sophia, thank you very much for your contribution. Craig, thank you very much for yours. Ashley, thank you very much for yours. And maybe a final comment from you, Ainsley.
Yeah, I just want to say a very big thanks to Sophia and Craig. Really great discussion. It's definitely given me some things to think about and take forwards. I think the reality is that the Gen AI has been a game changer, that it's accelerating at pace. And as Sophia mentioned earlier on, if you're not already started along that path, you're probably running a long way behind people that are going to eat your lunch tomorrow. So we really need to be mindful of these things, but you also need to do it responsibly, be mindful of the legislation, and make sure that you are working with organizations that can help you understand where the genuine wins are coming from. So I think certainly these are things that we'll take in mind going forwards. So thank you all.
Again, thank you everybody for joining us today. I'm going to end the session now, and do enjoy the rest of your day. Thank you very much for joining us. Goodbye.